Recording. All right, hey everyone, it's Dean and Isco here for another market update. We're April 21st today, so we got some big news. We got Isco here from SAF Mortgages, so let's get right into it. So rates, nothing changed. What do you
Nothing
think?
changed. Yeah, they held the rate steady. Some movement in the fixed rates. They actually came up a little bit at some lenders. One of my lenders had the last sort of promo last week on the fixed side, 5-year fixed rate. They had 399, and they said that 400 applications came in one day. Just to secure that rate because now they're at 414 or 419.
Wow.
So a small movement on the fixed side. Hopefully that comes back down. And the variable is the Bank of Canada held steady. Discounts are a little bit less now from all the lenders on the variable side as well. So very interesting.
What do you think of that move? Do you think that was? I think everybody was expecting like a. So yeah, we had 2.75. We dropped 0.25 last in March, and we've been kind of on a downward trend since last June. And now we're holding steady. What are your thoughts? I'll let you go first, and then I'll say my kind of thing. But
I mean, they're just holding off on the inevitable. They're gonna have to cut again.
Yeah.
Right. So maybe next announcement they cut 50 or they'll cut at least 25. But yeah, I mean the economy is showing signs that it's slowing down. They're gonna need to step in and do something. That's just bottom line.
yeah, I think what was it in March? They also did the inflation numbers and stuff like that, and we were
Yeah.
up obviously, and that was because of that tax and when they took off the tax for the holidays and stuff like that in the winter.
Yeah.
So we'll see. I mean, I think it's in an interesting place. I wanted to go through some stats, kind of to show where we're at in terms of numbers and stuff like that.
Yeah.
But yeah, like I don't know. It's there's some positivity out there, but I know a lot of people are talking about tariffs, election, and things like that. Did you go vote?
I did.
Yeah, me
I
too.
did. Did you? Yeah.
Yeah. So anybody out there, if you have comments or experience about how your voting experience was, please let us know. I'd love to hear everybody's feedback on that because I went to whatever school nearby my property was, and it was
Yeah.
like there was maybe like 30 cars, 30 cars in the parking lot, and I was like, oh, this should be not too bad, right? It wasn't packed. It was early voting. I was like, okay, let me get in there. It was like a 20-30 minute wait there was like I think 3 people ahead of me in line,
Okay.
but you're waiting.
But you're just waiting.
You're waiting.
Yeah.
And then somebody told me like, oh, they shouldn't be giving you pencils. They should be giving you pens. So like I'm just like thinking about all this. I'm like, man, how could we not make this so much easier for people? Like we're in 2025. Like it's like this is not like the old ages. Like you should be in and out. You're marking off the person you're voting for, and off you go. Like I don't think it's that hard of a thing. Anyways, I was like, how long has it been since we last voted? 4 or 5 years, whatever. Was it long?
Well, I think 2021.
2021, yeah.
Was it? Yeah.
4 years,
Yeah.
yeah. So yeah, I mean, I don't know. It's I think it's always a shock just how crazy it is and stuff like that. So I think a lot of people, I don't know, like people in line with me were just like, what is this? Like, why are we waiting so long just to to put an X on a circle, right? So yeah, that was interesting. Oh yeah, stats. So we talked about interest rates. We're talking about what's happening, what they're thinking about, all that stuff. We never know, right? We never know where it's gonna go. Like the next one is June 4th, so that'll be interesting. As far as the real estate market, what are you seeing like on the mortgage side of things? Are you seeing like I find that the activity was pretty high in January. Then it slowed down in February, and we're going to go through those numbers too. Like the numbers speak for themselves too, but just activity has been very, very sporadic, depending on the property. Like some places are getting multiple offers depending on the location, and some places you can negotiate all you want, right?
Yeah.
It's a little bit weird out there. So
Yeah, like we had a great January, great February. I'd say up to mid March was pretty good, and then it kind of slowed down on the purchases a little bit. But now, just now, it's back up. Like I think we got I don't know last week like how many pre-approval applications for purchases. So the only thing is I'm finding that a lot of people, I don't know if it like have smaller budgets. I don't know if it's just the first time buyers coming back. but like I find a lot of people are looking for that 400 to 450 price range, which I haven't really seen in a while. Like, I mean, they were always there, but maybe it's just it's a coincidence. But like getting a lot of people looking for something like that,
Yeah.
which is difficult, I think, right? Like you can't really find much for 400, 450. That's like it has to be a condo
Yeah,
essentially.
pretty much,
Yeah,
right? Like you're not getting anything freehold. I mean, in the city at least, right? Like even if you go to the suburbs, you're looking at anything freehold. You're probably looking at a 3-story townhome, recently built, probably in the last 10 to 15 years. High fours, low fives,
yeah,
you know. But that's, you know, you have a 3-story town with no condo fees, but no backyard. You know, 1 or 2 parking spaces with a garage and stuff like that. About 1,200 square feet.
yeah,
Condos are sporadic too. Condos are anywhere between 350 to 550, depending on what you're looking for, and stuff like that. So,
yeah,
but they're also some of them are even bigger than the 3-story towns. So, do you go
yeah.
with a 3-story town just because it's affordable, or do you go with a condo that's a little bit more affordable, but you get way more space,
Sure.
and maybe you pay $200-300 a month for a condo fee? But I don't know.
Yeah,
It's like you got to find what's best for yourself and your family situation, right? Like, I
yeah,
mean, it's at the end of the day, if the place is too small to live in and you got 3 kids and you got 1,200 square feet and, you know, only 600 square feet of it is usable, right? Like they factor in the foyer, the walk, the stairs are all factored into square footage. So if like, you know, if half of your like a quarter of your home is stairs and entrances,
yeah.
you don't really have much living space, right?
That's
Like
right.
it's places that you can walk through and stuff like that, but you're not actually sitting in them. So
Yeah.
something very interesting. That's what I'll say. So average prices of homes sold. So this one is the that I wanted to really kind of go through. So where were we? So let's take a look here. So April last year, and this was March. So March we're 651 average price of a home sold.
Okay.
Right now, March of 2025, 637,
Okay.
but going up, right?
Going up.
December we're at 603.
Wow.
January bumped up to 626. February dropped down to 612.
Okay.
So prices went up, down, and now we're going up. I think we're trending up. I don't know how much. I don't know if we're gonna exceed this price here of
Yeah.
last March, or sorry, yeah, is that April or March? I think that's April. Yeah, it's probably April. But yeah, I don't know if we're gonna exceed 651. It's like it's getting close for sure, but
Are condos still like more difficult to sell?
depending on what it is, right? I think the issue with the condos is that the condo fees all had budgets before the inflation had kicked in,
Yeah.
and then those budgets probably got blown out of the water depending on how much reserve fund they had and stuff like that. So some of them are tougher movers. I know, you know, even the newer buildings with pretty good amenities and good condo fees are still taking longer to sell. So it's a little bit interesting, but
I wonder if that's driving the prices up because most of the homes being sold now are single family
for sure.
as opposed to the
For sure.
condos. So then,
Yeah, like anything Centertown, Westboro, Alta Vista, like those are all still pretty high price points. Rockcliffe Park, stuff
yeah,
like that, right? The suburbs, like we'll look through the inventory, but like the suburbs are also getting a good amount of high price points, but they're not selling as quick,
yeah,
right? Like something in the middle of the city, like right in the heart of the city, is moving much quicker if it's priced appropriately. But like in the suburbs, you probably like if you're looking for a single family, 2-car garage, single home, you probably got tons and tons of choice,
yeah,
right? So
yeah,
we'll look through that again. But yeah, interesting to see, right? So it'll be interesting to see where the numbers for April went, but this was a pretty big jump. I mean, we're already kind of headed there with that January number at 626. We dropped down by 12 grand and then went up by up to 637 there. So that'll be interesting to see. The one thing also, this one here, so this is units sold.
okay,
So 2025 is the black line here. So what did we have? So March we had 1,442 sales.
okay,
So January we started off pretty strong. So 21, 22, look here, 1,211, yeah, like 1,200 sales pretty much both of those years.
yeah,
2023 we had 760.
yeah,
2024 we had 895. January this year 892.
okay,
So similar start. But then look at this one, right? So 2024 actually looks like a better year in terms of units sold.
Yeah.
This year, February, 1093.
Okay.
A little bit more than 2023, but a lot, like 700 houses less
Yeah,
than 2022.
what a difference.
Yeah, and then same thing with March, right? We're about 200 homes shy of 2024 and just on par with 2023. So that, a lot of people, like I've been saying that it seems like a very similar year to 2023 just based on how the market's moving. Like we're in 2023 we hit 1,840 units sold in April, 2,000 last year, and I think we're probably gonna be closer to that 1,800 mark, maybe even less. I'm not sure. But you can see here too that in 2023, the spring market kind of carried it into June. Like we had a pretty good June month here, and a good May.
Yeah.
Whereas it was like, yeah, like we can't really factor in 2021. Like it was just hot all year round.
That was, yeah.
Yeah, so 25,000 homes sold in 2025, 19,000 in 22, 16,000 in 23, 18, yeah, 19, yeah, so 17,000 in 23, 19,000 in 24, and I think we're probably going to be on par with 23.
Wow.
Yeah, the highest amount of home sales in a month this year has only hit 1,400, and in 23 is 2,300. So we're probably going to see one of those numbers soon, probably in May.
It's interesting.
But
I
yeah.
really thought like 2025 was going to be,
That's what everybody thought, right?
you know what I mean? I
Everybody
really,
going into it is like, okay, this is like the rates are going to be down, prices are, I mean, prices you never know, right? But
Yeah.
rates are going to be down, things are going to move, there's going to be enough inventory, but I don't think there's as much inventory as people thought. I think there's a lot of inventory sitting. That's like all different types of inventory. Like it's
Yeah.
like, you know, if somebody were to ask me how's the market, well, it depends on what segment you're looking at, right?
Yeah.
Are you looking for a condo? Are you looking in the city? Are you looking on the outskirts? Are you looking for something rural? Those are all three different markets. So I think that'll be interesting to look at. But yeah, like I don't think we're gonna hit, like based on 2023, like this is kind of where we're gonna be. 2021, we're still not close there. So if you're
yeah.
a buyer and seller, like looking at this stuff is gonna be super important.
Yeah.
Units sold, so just factoring in 23, 24, 25. So basically after the rates increased, this is the trajectory that we're on. So all similar trajectories, like not too far off, right?
Yeah.
And then you're gonna see kind of things tail off here in December. So that'll be
Yeah.
interesting to look at.
Very interesting, yeah. Because I mean, really, like our January, February, March, and like even our December, like we thought, wow, like if this is what it's gonna be like, it's gonna be crazy.
Yep.
So,
Yeah, like 2024. Look, this is right here in November,
yeah, yeah,
and this is December,
yeah,
right? The December is always low just because there's not much activity, right? Like
yeah,
holidays, time off, people are doing family stuff. Like nobody's really like unless you really need to move, or you want to move in December, then you're not really looking at homes, right?
yeah,
And also people are spending a lot of money during that time. So
Yeah, yeah.
you know what I mean? Like,
Yeah.
'cause it's if you're a family, you might be spending a couple thousand on, vacations, Christmas gifts, yada yada yada, all these things, right?
yeah,
Black Friday and stuff like that. That's one thing I'm interested to see because I feel like we had a good consumer sales last year, like based on like Black Friday deals and stuff like that. There was actual deals. So we'll see this year if it's the same because I think that stuff is affected first before housing is. One thing that's interesting as well, we've talked about this before too, is prices of cars.
yeah,
And I'm hearing that from clients too. Like a lot of people are talking about like, oh, I gotta get a new family van, or I gotta get this, or I gotta get that, and the prices aren't cheap, right? So,
yeah,
that's one thing that I think, like, and that's affected by tariffs too,
yeah,
right? Like some of these car manufacturers are raising their price
yeah.
because of that. So,
And the used cars go up, I think, because of that too.
yeah, because there's more demand, right?
Yeah, and new cars go up, and used, yeah.
Yeah. So we'll see.
Gotta drive your cars to the ground. That's it.
It's gonna
if
be
it's
one of
working,
those,
it's
yeah.
yeah. I
Yeah,
know.
yeah,
I'm a
don't-
I worked the car. We both were in the car business, so
Yeah.
we saw sort of like what happens when people trade in and buy something every year.
Yeah.
It's just like,
I had people trading their cars in every year and a half to 2 years. Like,
yeah.
it's not, it doesn't make sense to do that unless
No.
you can really afford it. But
I remember they used to go from like a 2013 Dodge Caravan black,
yeah,
2014 Dodge Caravan black, Nobody knows that they bought a new car,
Yeah.
$20,000 difference, or sorry, 20,000 kilometers on the,
Yeah.
and they would say, well, you know what, $30 every biweekly, I'll take it. It's like, no, you're actually like you're adding time to your loan, and you're just getting negative equity. So people, that sort of culture of just upgrading for no reason. I mean, I don't get it.
Keeping up with the Joneses.
Yeah.
That's basically the mentality, right? Like
Yeah.
you're just, I mean, I would never be doing that for a new van every year, but
Change the color at least so somebody knows you
Get a
bought it. You
silver
know, got
one,
the same
Get
color.
a silver one with the rim package, you know.
Yeah,
That's
exactly.
that. The one other thing I wanted to talk about is too, the Canada 5-year bonds. So what are we at here? So 2.754. Let's take a look at a 1-year trend. So was this last April? Yeah, last April, same time, we're at 3.79. So a full percentage point higher on the yields or the bond yields. And then now we're at 2.754. We hit the 2.63 a couple times, 2.5. Yeah. So we're in that for a while. It's been going up and down, but I mean, this is a better trend than what we saw over the last 3 years, right? So like if we look at the last 3 years, we're at the lowest point. Yeah, one of the lowest points since 22. Which is, I mean, you can take this how you want, right? This basically just, this is how I look at for forecasting the fixed rates.
Yeah.
But at least we're out of this part,
Yeah,
the
yeah.
4%, right? Like
Yeah.
that's the positive news. The stuff, the negative news stuff is that, like you said, banks are seeing market share come back, and they're not really willing to offer up those aggressive rates that they did before. So,
Like we had things in the threes.
yeah, what was it, like 3.89?
3.99. I have a lady right now that's a transfer on renewal and got her 389 and 500 cash promo. I'm like, wow, you know,
Okay.
incredible.
Yeah.
Compared to like, you know, what was being offered by her bank and what was in the market a little
Yeah.
while ago. You
So,
know?
so here's my question for all my people out there that are looking at comparing banks and mortgage brokers. How much of a difference are you seeing comparing a bank rate? Like let's say somebody's looking at TD, RBC, and CIBC, whatever,
Yeah.
right? How much of a difference are you seeing with the monoline lender and stuff like that? Is there like a difference of 0.2%?
Yeah, so I'll give you an example in this case. So this case, she got a renewal offer from TD and she was offered 4.46.
Yeah.
We ended up getting her 3.89. So that's a big difference. One of the things that monolines look at is even on a transfer where banks really don't take that into consideration is the loan to value.
Yeah.
So for her, she had a house that was worth quite a bit of money. She only owed a small amount. So we're talking loan to value of less than 25%.
Okay.
So typically, if your loan to value is less than 65%, and you do a transfer, you're going to get the best rates from the monoline. So even if you don't have an insured rate, you're going to get pretty much insured rate pricing, assuming your loan to value is under 65. So at that point, the monolines become competitive, right? If you're going straight conventional renewal to conventional renewal, there might not be benefit. But if you're doing like an insurable transfer,
Yeah.
then there is. So it really depends on your equity. And of course, when you're doing a transfer, when you do an insurable transfer, there's lots of benefits in terms of the rate, and then you don't pay you don't pay for legal fees on closing. But there's some times where the bank will be super competitive.
Yeah.
But that's also because they look at sometimes some of the other products that you have with them.
Yeah.
Strong clients, lots of investments, different things, big mortgage size, then they'll willing to do a little something for you.
Yeah.
If there's no relationship there,
Yeah, if you're just shopping for the best rate possible,
Yeah.
it might not be the best opportunity. But
Yeah.
like you said, I think every client is different, and they look at it objectively, right? Like if somebody's got 100 grand in investments with TD, and they have the car is financed through TD plus this plus that, and you're buying $1 million home,
Right.
Maybe there's some opportunity there for you, right?
Exactly.
To go with the bank, but
Yeah, like one of the guys on my team, actually, he had these two clients. They were TD executives living out in Oakville, and so both, I'd say like vice presidents.
Yeah.
So pretty up there. 12 years at TD. They bought a $2 million home in Oakville, sold their house, was worth $1 million, took the entire money and put a down payment on it. We went with Desjardins on that one, and the Desjardins variable beat their TD executive employee pricing.
That's
If you
crazy.
can imagine, they were shocked. They could not believe it. But it's just, having like, it depends where the lender.
Get a second opinion.
Yeah, like
Simple as that.
Desjardins, they've been very clear about it that they want to grow their market share in Ontario,
Yeah.
right? They're in Ottawa because people, know there's that
Yeah.
connection. They're not in Toronto. They want the Toronto market. They want to be in Toronto. So are they going to do a little more for their Toronto to get that
Buyers,
market
yeah.
share? I'm sure they will,
For
right?
sure.
So that's sort of what happened here.
Yeah.
So
That's that's a good case, right? Like every situation is different, and it's
Yeah.
not a one size fits all. Like you don't just go click on a button and that's your rate. It's
Yeah.
really like you gotta, and then that's what I tell people too. You don't have to go one way or the other. You don't have to go with a bank. You don't have to go with the mortgage broker. You can get a few different opinions, see what fits your scenario, right? And I think that's a huge part. One thing I wanted to do is I wanted to talk to ChatGPT. So I've been starting to use this a little bit more and more, and I was thinking about how do we predict the market? So I wanted to ask ChatGPT, what do you foresee happening in the Ottawa real estate market over the next 3 months? I'm going to get it to read it out loud.
Okay.
So it's getting a bunch of sources, like these are, yeah, all right. So it's getting a bunch of sources. Let's see here.
Over the next 3 months, Ottawa's real estate market is expected to remain balanced, with increased inventory providing more options for buyers and fostering a competitive environment for sellers. Market conditions. As of February 2025, the average home price in Ottawa was approximately $669,945, marking a 1.4% increase from the previous year. Active listings surged by 61% year over year, resulting in 4.6 months of inventory, which indicates a shift towards a more balanced market. The sales to new listings ratio stood at 49%, further confirming balanced.
What happened here? Did it stop reading?
Over the next 3 months, Ottawa's real estate market is expected to remain balanced.
Okay. So yeah, it's for whatever reason it's only reading parts of it. So yeah, saying balanced market. Overall, Ottawa's real estate market is poised for stable activity in the coming months, with opportunities for buyers, sellers, and investors alike. So this is a pretty basic take.
Yeah. Yeah.
Nothing special about it. Talks about the rental market too. Ottawa's rental market is experiencing heightening demand due to population growth and affordability challenges in the home ownership sector. This surge may lead to lower vacancy rates and upward pressure on the rental prices. Advice for stakeholders: buyers with increased inventory and stable interest. Buyers have more options and negotiating power. Focus on well-priced properties, especially in transit accessible neighborhoods. So yeah, that's kind of what I was talking about, is anything central and like transit accessible.
Yeah.
That's going to be the big thing, right? For sellers in a more competitive market, it's crucial to price properties appropriately and ensure they are well presented to attract buyers. Huge. That's a pretty standard take. Investors consider properties near transit hubs and in growing suburban areas, which are expected to see continued demand and potential for appreciation. So basically, it's talking about location, location, location. So that's again, these are all pretty standard takes. Let's ask it something a little bit different. If you were to predict the Bank of Canada's next move on interest rates, where do you think they land by June?
As of April 21st, 2025, the Bank of Canada's BOC benchmark interest rate stands at 2.75%, following a pause in April after 7 consecutive cuts. Looking ahead to the next scheduled announcement on June 4th, 2025, market indicators suggest a high probability of a rate cut. Specifically, futures markets imply a 76% chance of a 25 basis point reduction, bringing the rate down to 2.5%. Key factors influencing this outlook: inflation trends. Canada's annual inflation rate decreased to 2.3% in March, approaching the BOC's 2% target. Economic growth. The economy is experiencing modest growth, with GDP expected to remain below trend. Trade uncertainties. Ongoing trade tensions, particularly with the US, introduce economic uncertainties that the BOC is monitoring closely. Considering these factors, it's anticipated that the BOC may implement a 25 basis point rate cut in June, adjusting the benchmark rate to 2.5%. This move would align with efforts to support economic growth while keeping inflation near target.
All right, let's unpack that. So, do you agree with that?
I think so, yeah. I think it's going to come down 25 basis points, maybe even more. We'll see. Like, I mean, we'll see what the economy is doing.
I find it's interesting. Like, again, it's just like listing sources from other real estate website like Reuters, Perch, Reuters again, Home, Vanguard, Canada. Like, it's just listing sources. So it's not. I don't think it's 100% accurate ever, but it's a good way to like just talk about the market and get talking points for yourself, right? Like. Yeah. The inflation numbers, it's decreased to 2.3 in March, approaching the 2% target. So I think that's going to play another portion of what's happening in the country.
Yeah.
The economic growth is experiencing modest growth with a GDP expected to remain below trend. So that's one of those things. Like, there's a lot of job loss out there too. Yeah. So I'm not sure what you're seeing on that, or like. It's tricky, right? Like, how can you predict something? You really can't, because there's so many moving parts, especially in the economic world. But I thought this was, I like ChatGPT just for this stuff, because you can ask it random questions and it'll find you some sources and how it's going to come to that answer. It's not, like I said, it's not the be all end all, but it's at least worth taking a look at, right?
Yeah. And the election too, right? So that.
Yeah. The election is a big one. One thing I wanted to look at, so I wanted to talk to people about, let's take a look at the suburbs. This is one big thing that I'm finding a little bit tricky here. So let's select, Canada, Stittsville. Let's select Barrhaven and Riverside South. So just like this. And then let's select Orleans and Findlay Creek. All right. And what I'm going to select here is I wanted to take a look at what's happening. So active. So let's take a look at how many active detached homes we have. More than 300. Okay, let's do this. 2-car garage. More than 300.
Wow.
Yeah, 300 plus. So if you're looking for a 2-car garage single home, if you're in Orleans, you have one almost on every single street for sale. Right? These are all different ages and all that stuff, but you have inventory for that stuff, right? So
why do you think Orleans is less expensive than Canada?
It's a tough one. I don't know. I think it's tricky. I don't know. Like, why do I think that? I mean, it is the least expensive suburb.
Yeah.
Why is it? It always has been. That's the general consensus I'm seeing, is that it always has been on the more lower end compared to the other one. I mean, I think the big thing is that Canada is the most expensive because of the tech sector that they have there.
Yeah.
I think that's more the answer to the question, as opposed to, like, think about it this way, right? So Canada has a big tech sector hub.
Yeah.
Barrhaven has a massive Amazon warehouse that supports tons of jobs.
Yeah.
Riverside South is all high end.
Yeah.
Pretty much, right? Findlay Creek is kind of like similar to Riverside South, not really, but similar enough.
Yeah.
But it's a smaller suburb, but they're also, like, the homes there are newer as well. It's a newer suburb.
Yeah.
Orleans has a mixture of everything, but I don't think it has any of the job opportunity that the others have, right? Like, there's
Okay.
no tech hub in Orleans.
Yeah.
It's a lot of retail and stuff like that, right? Like,
Yeah.
all of Venice is retail,
Yeah.
right? So there's not much there in terms of huge opportunity. The other thing too is I think that Barrhaven and Canada, they have the 416 that leads you down to the 401. So I think that's a big one. I think that's a really big one because anybody moving from Toronto up to Ottawa, they have easy access to go back to see their family home. Like, you know what I mean?
Yeah.
Like, if somebody's moving from Toronto, that doesn't mean all their family is moving from Toronto. So
Yeah.
having access to go back down there
Yeah.
is a pretty big one, right? Because
Yeah.
there's about a 40-minute difference between Barrhaven and Canada to go back to Orleans. So, like, if you're from Toronto, the likelihood of you moving to Orleans is going to be lower. You know, I think you're probably going to cut it off somewhere center of the city.
Yeah.
But the other thing can be said too is that, you know, in Orleans you're closer to Montreal.
Yeah.
So it's like there's probably a tons of factors, but so, like, look at this. This is what you have. So in Orleans you have pretty much a single home for sale almost on every street. Finley Creek, pretty much the same thing, right? Not on every street, but a little bit more sporadic. Barrhaven, you know, the older part of Barrhaven doesn't have much, like this part in the beginning of Longfields.
Yeah.
But after that, you have everything in Chapman Mills, tons here in Half Moon Bay. Half Moon Bay, you can get whatever you want, basically. Like, there's a home on almost every street for sale. That's a single.
Are you finding that like public opinion towards Barrhaven is
Yeah,
changing?
huge. It's too busy.
Yeah, that's what I'm hearing.
It grew
too.
way too fast.
Yeah.
And like, look at Canada. Canada's jam-packed with single homes.
Wow. I love Canada.
Yeah, no, Canada's nice
Yeah.
for sure. Like, it's, but I think Canada and Orleans are similar in a way. I think they're probably the most well planned suburbs, in my opinion. Like,
Yeah.
they have easy access to everything, so it's like it's a little bit different, right? Whereas Barrhaven, like, yes, you have the 416 access, but man, that gets log jammed very
Yeah.
quick, right? Like, that you have Dealership Row here on on Strandherd.
Yeah.
And that's a jam-packed street almost all day long. At 5 p.m., it's just as bad as downtown traffic. Half Moon Bay is not really that close to the city. Like, it's in Barrhaven. It's part of Barrhaven kind of thing, but it's like an extra 10 minutes out of your way,
Yeah.
further down south, right? So, yeah. So that's one thing I wanted to talk about for the suburbs. So yeah, single homes, you can pretty much get whatever you want. Let's take a look at townhouses. And I have double car garages on there. So let's do 1+. Yeah, we have tons of opportunities for townhouses too in the suburbs. Whoops. Yeah, same thing. There's tons of inventory. Orleans, you know, obviously the older neighborhoods don't have many townhouses. There are some, but it's more single homes, single family homes. But yeah, like Queenswood Heights, this part of Orleans is you don't have as much inventory, but like the outskirts, like Avalon, Fallingbrook, Chapel Hill South, they're all going to have a good amount of inventory. Finley Creek, good amount of inventory. It's priced pretty high. That's the one thing.
Yeah.
Barrhaven, you have tons,
Yeah.
especially in this Jockville area. Like, these are going to be older homes, I believe. No, they're newer-ish, yeah. So you have a bunch of everything,
Okay.
but not as much in the Longfields, Chapman Mills area. You have a little bit less. Yeah, quite a bit less, right? Compared to Half Moon Bay there's tons of homes for sale there. Singles and townhouses. So that's what I mean. Like, this is an extra 10 minutes out of your way in Barrhaven. You're not even in Barrhaven proper, right? Like,
Yeah.
I would say this is really the cutoff for Barrhaven, and then you're heading into Half Moon Bay.
Yeah. Okay.
And then Canada. Yeah, good amount of opportunity in Canada too. But like you said, higher end prices. So how long is that going to last?
Yeah.
That's my question is, like, if you're a townhouse and you're looking to list your property somewhere in the Stittsville area, Canada, old Stittsville, right? Like, look how much inventory there is around you just for townhouses.
Yeah.
Plus we add the detached, right? Like, there's something's got to give eventually, right?
Yeah.
So let's do, now I want to do one different thing here. I want to talk about the inner city. So
Are you finding that a lot of lots or teardowns are coming up for sale? Or
I'm seeing more. One thing we have been seeing more is bank sales, foreclosures. That's one thing that's been coming up a little bit more these days
yeah,
compared to the past. So what do we have here? So townhouses. So I'm basically going up to kind of like just before Beacon Hill. Let's factor in Carson Grove, Searville area, Pineview. Let's go up to that. So that's just like basically city in the city. You have 39 townhomes for sale. It's way less
yeah,
than any other suburb, right? And
Yeah.
this is super sporadic. Each neighborhood has maybe 1 or 2 townhomes for sale,
yeah.
right? Like let's take a look at detached. Now detached is gonna get tricky, obviously. Yeah, 223. Let's see, detached under 1 million. 86,
Yeah.
right? Let's say detached under 1.5, which is with the new rules, you can do what, less than 20%?
Yeah. With
Right?
1.5, yeah.
You have 149.
Yeah. So
You have some ability at the 1.5 mark, but at 1 million, you have nothing.
yeah. There's a house in my neighborhood that just listed for $1 million, and I went to go in the realtor to check it out, and he's only got like 4 or 5 pictures of the exterior.
Yeah.
Nothing of the, like why do like can you walk me through the decision making when you're about to list a house for $1 million and you don't want to show any interior pics?
Yeah, you're hiding something.
Okay.
So did you see the house or?
No.
No.
The exterior wise, I mean, I don't know if it warrants $1 million price tag, but I saw that I was like, what? Like big lot, yes.
Yeah.
But no interior.
Yeah, it's tricky, right? Like
Yeah.
sometimes, like listings that only have 4 or 5 pictures, typically they're probably going to be a tenanted property that doesn't show well in pictures and
Yeah.
probably won't show well at all in person. That's typically what I know from why somebody wouldn't take pictures. Like for me, the biggest thing is like you have to show off a property, right? So why are we not doing our best to show it off as much as possible?
Yeah.
2 factors to that. Factor 1 is you're not trying to.
Yeah.
Factor 2 is you have other circumstances that are hindering you from doing that, right?
Okay.
So one would be a tenant, one would be that it's the property is in super rough shape and you don't want to show off too much of it. The other one is going to be it's got deficiencies everywhere. So yeah, like those 2 points
Yeah.
factor in the same thing. But yeah, I mean that's going to be your main reasons, right? Like
Yeah.
why is somebody not taking professional photo? Like for me, like I talk about this all the time is the iPhone photos. I hate it.
Yeah.
How can you be a professional and take iPhone photos? It has like, if anybody is signing a listing agreement to go on MLS, there should be no reason why you're not taking professional photos. It's like it's
Yeah.
it's your number one thing, right? Like, and I get it. Some people say like, oh, like they do too much editing, so you get catfished when you go see the listing and this and that. Like, yes, I get that too, and it is a bit frustrating, but I'd rather have professional photos than photos by an iPhone because then nobody's gonna like it.
Yeah.
Like
Yeah.
you take pictures with an iPhone, you don't have the lighting. Yes, some of these photographers do have to edit a little bit. Obviously, if you're spending 3 days editing a photo,
Yeah.
it's gonna be super like, wow, but it's not gonna be a realistic photo. But like, 30 to 40. Like now we have the ability, I think, to go up to 50 pictures. So like 30 to 40 pictures is great.
Yeah.
You can show pretty much almost every wall in a house. I mean, obviously, depending on the house, the size of the house, and all that, but you can show at least every room, most of the hallways, and all the bathrooms, right? Like you have the ability to do that. You can take drone footage, and you have the ability to really showcase a property. So like, let's take a look at this. So here we go. First example. 1.3 million, 24 days on market.
Yeah.
Like 4 pictures. This is the first one I clicked on.
Yeah.
4 pictures.
Yeah.
It's tenanted, right? So there's my point right there. So it's tenanted property. It probably looks like crap inside.
Like how are they gonna sell? Like
Well, that's
the
it's gonna sit there for a while, right? Let's take a look at this. Normandy Crescent, just off of what is that in City View? 1.1 million. Gorgeous pictures.
Yeah.
Right? Well thought out, staged, probably like if not staged equipment, but at least probably like they rearranged everything to make it look nice and warm and opening and welcoming, right?
Yeah.
but the place obviously looks way better. But like, I mean, that's your price points, right?
Yeah.
What else do we have here? Let's see something in Vanier. No, we won't do that one. That was $399. Let's see Rockcliffe Park, right? These are supposed to be higher end pictures. Or higher end properties, but yeah, like this is, someone's asking what, 1.2,
1.2.
right? So, tough, right? When you're showing a property like that, it's gonna get tough. Let's see what else we got. Westboro. 1.18. Great. You know, professional photos. Same thing,
Yeah.
right? Like, yes, there's some editing done here with the lighting and it's been brightened up but at least you know that, you know, the appliances look clean, the place looks clean, the place looks nice, you can see, if there's any deficiencies, you can probably see them in the pictures, right? Like,
Yeah.
I don't see any deficiencies. It looks like a pretty nice place.
Yeah.
Is it gonna show exactly like this? Is it gonna be shining when you get in there? No, it's not.
Yeah.
But, you have a good idea. Let's do one more example here. So let's see if we can just nail
Should be
one.
there.
Right here?
Let's see. Let's just curious if
Withrow?
So go up there, like Warbonet, like City View Skyline, right there to the right.
Which one? Oh, this one?
Let's see what's that one there.
Trillium?
Yeah. Check. So I think that's the. Is it? So occupancy owner.
Owner occupied. Well, it's got 24 pictures.
Is it? Okay.
Oh, no pictures inside is what.
That's
19 pictures, 24 pictures of the exterior. That's crazy. I have not seen that before. Okay, let's see if we can find some history here. Okay, so this is what it looked like when was this? 2006. Yeah.
wow.
So, anyways, we don't know what it looks like right now, but
Yeah.
to be determined. But yeah, 24 pictures. I mean,
All exterior.
I would be annoyed if I saw that for sure.
Yeah, especially at that price point, It's
Yeah,
like-
so you're gonna trying to sell your property for $1 million, and you don't have a single interior picture. You don't even have a picture of a single bathroom or a bedroom.
Yeah.
Tough. What else we got here? Seymour, Fillets. Yeah, so these are all gonna be hit or miss depending on what it is. Yeah, this is. I think I'm still at the under 1 million mark. But yeah, like this is like. I mean, it's not bad, right? Like if you're looking for in the city, under 1.5, right? You got some opportunity here. Basically, every neighborhood has something.
Yeah.
Like obviously, single homes are going to be more expensive. Like if townhomes in the suburbs are going between 600 to 700, in the city, easy access to the highway. Like ChatGPT said, right?
Yeah.
High transit hubs, right?
Yeah.
Yeah, like there's some areas that have very, very little activity. Like look at Old Ottawa South, the Glebe, Little Italy. Little Italy has one property on Bayswater, and that's a rough part of Little Italy, like Hintonburg, right? Like, have you been down Bayswater?
I think so. Yeah. Like the train station is close to there,
Yeah,
not it?
yeah. But like basically Hintonburg has not a single detached home for sale. So if you're a buyer looking in this neighborhood, right, you want to be living in Hintonburg, what are you going to buy?
Yeah.
You have no choice.
Right.
You have basically one or two choices, right?
Yeah.
Your choice number one is going to be 111 Bayswater. This probably doesn't fit most buyers, right?
No.
So, anyways, just
Interesting, yeah.
it's tricky, right? And then you go to Westboro, again, same thing. You don't have much. You got 1.45, 1.3, 1.2.5, 1.3, 1.1, 920, 1.2 almost, right? Like, and this is like these are all smaller neighborhoods that are a little bit more sought after. So like the competition in these neighborhoods is a lot higher, right? Compared to like Central Park, you don't have a single detached home in Central Park.
Yeah.
So the next single home that comes up in Central Park, probably gonna have 3-4 buyers just looking to get into that, right?
Yeah.
So
Carlington's an interesting neighborhood.
interesting for sure.
Yeah.
We got the big sore spot right here,
Yeah.
right?
Yeah.
But how do you put something up for 1.4 or 1.4 and a half?
Yeah.
100 meters away from a pretty rough area, right?
Yeah.
So
Well, that's the thing. It's very interesting because like it's like a half. It's like it's on its way to Westboro.
yeah.
There's that like there and just that entire street on Maryville. Right? Like there's so much
Well,
opportunity there.
so you're there, and then you drive what 500 meters, just under a kilometer, and you're in Island Park, and you're looking at homes between 1.5
Yeah.
to 5 million.
Like I feel like
Right?
that could be like, and there's a lot of those wartime homes there
Yeah.
too. Interesting layouts. I'm like, I don't know, is that like like an opportunity in the city? I mean, I don't know. It's tough to say because even like at that corner,
This corner you're talking about?
well, yeah, like Maryville and Carling,
Yeah.
all those new high-rise rentals are
Right
being
there.
built where the
Yeah, like-
Westgate Mall, like there's like lots of development there, but nothing is touching the Carlington, like which
tough.
is interesting,
Yeah.
you know? Yeah.
Yeah, like Carlington is a little bit older, right? Like there's a bunch of homes there that are not like. There's also a lot of multi-units there too, right?
Yeah.
So I don't think it's that ideal of a neighborhood if you're looking to buy something and renovate. Like you're probably going to be neighboring on properties that are, 4, 5, 6 units.
Yeah.
It's not going to be that private. You're going to be a little bit more on the busier end. It's not going to be like a single family area where you can have your kids grow up and stuff like that. It's going to be a little bit of a more high traffic area.
Yeah.
But like you said, right? Basically, all of Carling and Maryville, like this section here, is getting fully redeveloped. Right?
Yeah.
Like there's I think 4 or 5 high rises already going up.
Yeah.
They got rid of that crappy motel that was there. They
Yeah.
Carling, the Westgate Mall is going to look a little bit nicer with that big high rise beside it. So I'm sure they're going to have new stores opening up and stuff like that. So it's nice to see because those like Westgate Mall was never anything.
Oh.
There was like 6 stores in there. There's probably way more, but like I don't remember anything more than 6 stores. There's like a
Service Ontario.
Service Ontario used to be there. There was a Blockbuster back in the day. There was a Good Tailor there.
Yeah.
There was probably a dry cleaner there that was really good too, and then 1 or 2 barbershops or something like that. I can't remember.
Not much.
Yeah.
Like my daughter goes there for ballet. There's the dance
Oh, yeah.
dance school.
Yeah.
But I talked to the second cup lady, and she goes, if it wasn't for this dance school, we couldn't stay open because all the parents just get coffee as they walk. Because she's like, that's our only source of customers. And I'm like,
Yeah.
it must be tough if you're a business in Westgate. But hopefully they try. And like Altea down the street, Premium Gym
Yeah, it's
has
crazy.
opened
right?
up, right?
you-
So like Carl,
yeah.
that little area is starting to.
For sure, it's growing
Blossom,
hard, right?
yeah.
Like, but like that's because you have a super high end neighborhood right like within what less than 500 meters.
Yeah.
All within okay. Let's say you live in any of these streets, right? It's
Yeah.
going to be a 5-minute drive any way you look at it because you're going in and out of residential streets. But like
Yeah.
still, a 5-minute drive with people that are probably on a higher end pay scale.
Yeah.
They're the ones supporting this whole thing, right? Like,
Yeah.
Carlingwood Mall also looks a lot better with like that big Canadian Tire that they have at Carlingwood Mall looks
Yeah.
great.
Yeah.
It's like I don't know. You go there, you can find whatever you want. Like,
Yeah.
it's pretty cool, right?
It's
And
the
like you
biggest in
said,
Canada.
yeah.
Yeah.
And then you have Altea, like a massive gym that's it is expensive, but there's only one way to support it, and that's by high end residents nearby, right?
Yeah.
So, yeah, all interesting stuff. I know we kind of went off on a tangent there, but like I just kind of wanted to show people like there is opportunity out there, but there's also there's also a lot of competition depending on what you're looking for, right? Like if we look into Nepean, right, like right here, like look at Centerpoint. Centerpoint doesn't have a single detached home for sale,
Wow.
right? And Centerpoint's a huge neighborhood. It goes from Greenbank to Woodruff and follows all of Baseline,
Nothing.
right? The only place where you can get anything near Centerpoint is Craig Henry, right? Like, and like you don't have much. Like you have 1, 2 homes here. You have some in the Manordale area here. Like it's pretty crazy,
Yeah.
right? Like you don't have much. You have from Baseline to Hunt Club. If you're going between Woodruff and Greenbank, these are all massive streets and massive neighborhoods, you got about 6 detached homes to pick from. So really, like, depending on what you're looking for, and look at Meadowlands. Meadowlands has 2 homes here, one in Crestview, 2 in Tanglewood, nothing by city, like St. Clair Gardens, like almost nothing.
Yeah.
There's a couple of them here in City View, like Côte de Neige and St. Clair and all that stuff, but like, I'm assuming these are the super expensive ones. No, 1.3 and a half, 1.3, like
Yeah.
pretty nice homes. But again, you don't have much choice.
No.
Fisher Heights, nothing. Right? Like as soon as you start like yes, the market is balanced, but as soon as you start looking in neighborhoods where there's no listings, there's no inventory, it's not that balanced anymore.
Yeah.
Right? Like same thing with Alta Vista, right? Like these pockets, like looking at Alta Vista, this park right here separates a $200,000 price point,
Wow.
right? And not a lot of people know that, right? Like there's homes for 1.1, 1.1, 1 million,
Yeah.
779, not 1 million, 1 million, right? Like this is all underneath the 1.5 million mark.
Yeah.
Then you cross Kilbourne,
Yeah.
875. Well, then there you go. Just prove me wrong. Then there's a 1.5. So, anyways, 824, 849, 724, 698. Right, like this whole area.
Much cheaper.
I mean, obviously, like the one big one at 1.4, proved me wrong pretty quickly, but still,
What's our normal?
small sample size, right?
Yeah.
Um,
Very interesting.
and then look at Hunt Club. You want to buy a single home in Hunt Club?
Wow.
You got nothing,
Yeah.
right? You have 3 here around Karsh, 1 off of Bloom, 1 in South Keys. You have absolutely nothing in Greenboro,
Wow.
Literally
Interesting.
nothing.
Interesting.
right?
Yeah.
So you're looking to buy in Hunt Club, pretty sought after neighborhood. You're gonna be in competition, right?
Yeah.
So like same thing here, right? Vanier South, you got nothing. I know it's not a pretty desirable area anyways, so that's fine. But you want to be in Vanier North, same thing. You don't really have much. You have 1 here, 1 here, 1 here. Like, so these are all probably all developments. Yeah, like this is a tear down for $399. Again, is this a tear down? Probably something similar. Yeah, like it's nothing special, right? So for $699, $1 million here on Montreal Road. Nobody wants to live on Montreal Road. Montfort, 625. So these are all crappy homes. Like not
Yeah.
crappy, but they're not really like
Yeah.
you got nothing here. Like you got 1 here to choose from on St. Charles. Nothing in these nice neighborhoods here where they're more residential.
Yeah.
You got something here in Linden Lee and New Edinburgh and Rockcliffe Park. Manor Park has 2 homes for sale. Right? It's not like there's a ton to choose from. So really everything is location dependent, and that's kind of how I look at it. Looking at it at a top view like this, yeah, you can do whatever you want in the city. And then you start going into these micro markets
Yeah.
and you got a whole different story, right?
Yeah.
So that's one thing that I'm running into with buyers is that depending on the location, they can either do whatever they want, negotiate how much they want, or they're kind of losing out on properties that, like here's another one. You know Revelstoke?
No, not really.
It's just off of Mooney's Bay.
Okay.
Super high-end homes,
Yeah.
like huge property taxes, not a single home for sale there, right? Mooney's Bay area, Riverside Park, nothing. They got 1 home here, 809, right? So
Not much.
Riverside Park South, another home here, right? So just 1.
Okay.
McCarthy, right? Like you got a couple homes here, nothing crazy. So yeah, like I think doing the research ahead of time to know what really makes sense is something that I'm really recommending to buyers. Is like we got to look at what's important and where you really want to live, because depending on the area, if it's not a suburb, we have to be careful on what you're choosing, and you got to expect certain things to come up, right?
Yeah.
So that's one thing that is a big discussion point for sellers or for buyers, and for sellers too. Some of my tips are, we also got to look at where we're listing, right? Like what location are we in? How much competition do we have? Do we have lots of competition? Are we the only one in the neighborhood? Are we only one in a 1 kilometer radius? If so, you have complete different avenues that you can take.
Yeah.
So, yeah, that's kind of what I'm seeing on my end with buyers and sellers. Do you have any tips or tricks for a buyer or seller nowadays?
Again, just keep hammering on the point, but get pre-approved.
Yep.
That's one thing. Get all your documents in order. And that's pretty much it. And for those people who are looking to renew, I would say look at refinancing. Because if monthly obligations are your biggest thing, you might want to just remove some of that debt at your maturity date instead of just looking for the best rate on renewal. So, yeah, that's pretty much for it.
Are you finding are you finding a lot of people are on contract jobs, part-time jobs, full-time jobs? Like, are you seeing a difference in job security these days with what's happening, or What are you seeing on that front?
Yeah, lots of people with contract jobs, lots of people with second jobs that just started, and that's another thing. If you have a full-time job and you've been there for a couple of years, great. But if you're looking to buy a house
Yeah.
and you take on a second job and you've been there for 3-4 months, it might be difficult to get that income approved, even if it's guaranteed. It's not like, not saying that it can't be done, it can, but sometimes the lenders are looking for sustainability. So they're saying, can this person juggle 2 jobs? And if they can, we need to see that they've been able to do that for a long time. So if you have a 2-year T4 average at both sources, then it's fine. But sometimes people, will get a job just before they start looking for a home.
Get a bit of extra income.
Get an extra income, and the lender goes, okay, well, he works a full-time job, and now he has a 30-hour second job. Is that sustainable? Some people it is, because they're project-based, they work from home. But some people it's not. So that's the other thing is, like, if you're relying on that secondary source of income, you might want to make sure that the hours are guaranteed. Maybe you're doing it for a little bit longer. So a lot of different things, but lots of contracts, lots of like short term, like 6-month contracts, not like 2-year. So a lot of interesting stuff. Yeah,
It's not like and that's one of those things is, can you sustain 2 jobs at the same time for how long, right?
Yeah.
Like life gets busy, especially if you have kids, you have sports with kids, you have your own social life.
Yeah.
So it's tricky out there. I don't think it's the easiest thing to just maintain 2 jobs. It's not like you can't, like, this is my full-time job. Sometimes I work 40 hours a week, sometimes I work 50, sometimes 60, sometimes 70.
Yeah.
Right? I mean, not every week is 70 or 60, but there's some weeks where I have to spend a lot less time at home and a lot more time on the field. So it's tricky.
Yeah, for sure.
But I couldn't imagine doing that every single week for the next 52 weeks.
Yeah, no.
Like that's very unsustainable. So
Yeah.
I agree. All right, so I think that's pretty much it. We've gone through the stats. We've gone through everything. I started doing something new. So if anybody's interested in doing a discovery call and looking at the market of where you want to move to next, or if you're thinking about making a move or just want more information in general, you can click the link below. You'll see a Calendly link, so you can directly book a meeting with me and just go in there. We can talk. We can see what your options are, and also go from there on, getting yourself pre-approved if that's something you want to go with, and just look at your options. And if you guys have any questions or comments, just drop them below. And we'd love to get some feedback on what to talk about next month. Obviously, we're going to do our market updates, but we're going to be pretty consistent on this thing. So we're going to be watching everything. We're going to be seeing what's happening in the market. And Isco, where can the people reach you again?
613 Mortgage Broker on Instagram. You can search my name, Isco, on Google. You'll find the office. So we're just in Britannia. So safmortgage.com is the website. All of our contact information is there. Yeah.
Cool. Awesome.
All right.
Thank you guys, and we'll see you soon.
Thank you.